how can neobanks strategically integrate Bitcoin and stablecoins to create a competitive advantage? Meet Richard Green. He leads go-to-market for strategic partnerships and growth across the Rootstock ecosystem. RootstockLabs is the largest and longest-running Bitcoin sidechain. In this episode, we have a masterclass on stablecoins. We cover cost considerations, user experience challenges, security and fraud protection, partnership selection strategies, and Richard's 3 key takeaways for neobank founders ready to integrate crypto infrastructure.
Most overlooked aspect is that you look at stablecoins in isolation, or you look at Bitcoin in isolation versus what it brings as a true whole programmable financial layer to finance, to neobanking and things like that. The biggest is obviously global payments, remittances. Why is that so successful? Well, it goes back to that point we were speaking about earlier. So those are the kind of two advantages. The lower costs really impacts more at the international level. So if you look at the US to Africa, that is a difficult payment corridor for a multitude of reasons. And what stablecoins can do is they can keep that as the same price as a very highly used and active corridor itself. Building a little bit of Bitcoin into the conversation is you can then do things as a business or as a user, treasury management, predict my cash flows into the future, management, working capital.
Hey, before we dive in, can I please ask you for a big favor? If you are enjoying these conversations and getting value from the insights our fintech leaders share, please hit the subscribe button below. This is the easiest way to support the show, and it could mean a lot. My commitment to you is every single week, I'll continue to bring more founders and product leaders that share with us the strategies that are working today to drive innovation and fintech growth. Thank you, thank you, thank you, thank you. So this week's episode, we are going to answer a key question that is very relevant for the industry, which is, how can a neobank strategically integrate Bitcoin and stablecoins to create a competitive advantage? So now everybody is talking about stablecoins, basically. And for neobanks, there's 3 things that we struggle all the time. How do we differentiate? How do we maintain or reduce OpEx as we scale? And how do we hit profitability? And now it's like the new kid in the block this year is stablecoins. Even though it's not a new technology, it's rapidly being adopted into the fintech space this year. So it's like something to look at the moment. So I would love to start with, you have a very interesting background because basically you've covered from traditional finance to also kind of working in Circle, Bitcoin infrastructures, and you have the holistic view. So what do you think is the most competitive advantage that is overlooked by neobanks when it comes to Bitcoin and, well, not Bitcoin, when it comes to crypto and stablecoins?
Yeah, I think you're absolutely right. When you talk about stablecoins being like the new kid on the block, but not so. I mean, it's huge movement, whether it be positions or whether it be pick up in market cap of stablecoins. I think that the most overlooked aspect is that you look at stablecoins in isolation, or you look at Bitcoin in isolation versus what it brings as a true whole programmable financial to finance, to neobanking and things like that. It obviously reduces in terms of transactions, in terms of moving money across borders and things like blockchains. But what it also does alongside is it can add full programmable layer. Things can be done automatically. Things can be done across borders of, you see with Stripe opening up 101 accounts, you look at the biggest banks in the world and they're maybe in 60 or 90 countries, and I'm saying it's an easy flipping the switch, but in a relatively easy one through acquisition, they've taken out in mid-range. And so looking at it holistically is a lot different. And then looking at it in the ways that it can open up not just the cost, but also it's 24/7. Saw recently that I think $13 billion were transacted over a weekend, right? So if you look at traditional payment rails, that is not really possible. And on a normal weekday, it's something like 24 billion. So you can really get into that 24/7 anything continuously do it. But when you look at the layer deeper, you look at it not just from the cost savings perspective, somebody may be transmitting money. You look at it from a cost savings perspective of the actual infrastructure that's needed for it, Neobank. Gone are the days where you have to spend 80% of the budget on building an internal infrastructure for payments, for moving money around. You can really buy it in, or you can obviously make use of the things that are, such as the blockchain technology, the stable coins that are already issued, Bitcoin that has been around for, a number of years, tested and is one of the most trustworthy assets out there. It's all, we're talking about it a lot more. It's becoming a lot more plug and play thing. I think the final thing is just you're looking forward at future proofing. This is in the same way that you would look at saying, okay, when the internet was coming around, what are things that are happening with the internet? With AI, what are we doing to plan for AI in the future? This is also saying actually the technology that is there is moving money at the speed of the internet. It's, HTTPS days, the email days to go, well, this technology is there. It's just about making sure that even if I'm not looking for let's say the stereotypical uses of stable coins or Bitcoin, or what's the actual technology underlying and utilize it to build it.
I love that as a opening statement, because at some point you said it obviously saves us time. I was like, it obviously saves us time in the mind of someone who's embedded, and looks at this and understands it. But there's many people within the industry that are still catching up on what are the benefits, right? And then it's like, that caught my attention as you were saying that, but at the same time, you finished like in a very nice way that it's like, we can move money at the speed of basically internet. It's great.
It is, and it's a great point you raise in the sense that it's something I'm sure we'll definitely touch on this later. As one of probably the downsides of the world of stablecoins, the world, and then when they try and move into a world of traditional finance, neobanking, that's one of the problems with crypto, right? They build for crypto, and then they say, well, why isn't this happening? So no, I think that when I say, it obviously reduces time. Again, I'm sure we'll get into this, but it is, you look at the ways the money is moved at the moment. And there's some amazing ways that it is. You look at Pix in Brazil, you look at M-Pesa, you look at Revolut, where they can move money instantaneously. And so it's about explaining and understanding. Well, if it's outside of those maybe internal networks, where do the actual benefits come from?
So let's start then with the basic, right? Let's go straight back to the basics. What are stable coins, and what's the difference between stable coins and Bitcoin? But I think that's a big difference.
Absolutely. So I think, stable coins are digital dollars. I'm going to call them digital dollars. And there's a reason I'm going to call them digital dollars, because 99% of the stable coins that are transacted are in dollar. There are other stable coins out there in different fiat currencies, euro and things like that, but the vast majority is in dollar. And those are to stable coins pegs to the stable set, which is the game. So for fiat currency. So significant market cap, kind of mid 200 billions, and money is constantly increasing over time. The difference between Bitcoin and people do is one is digital cash and one is digital gold. I think Bitcoin has often been reviewed to as digital because of those people holding or hodling if you're in the crypto industry. And they view it as a store of value. They view Bitcoin as that, let's say, an inflation hedge in certain ways and something that will increase in value over time. Whereas stablecoins, it's about, well, what am I paying? What am I using that to pay for? What is the actual, if I'm going to a shop and they're transacting with? So whilst you still see people, we work with people at Rootstock trying to set up ways to pay with Bitcoin and find utility in Bitcoin. And again, that's a big discussion point. You'll see that it is mainly this view of digital cash to use and spend and digital gold to hold and use as well.
I love that analogy. Digital cash, digital gold to hold. Yes.
Yeah.
And yeah, because then you mentioned utility. And I think that's part of the thing that it's clarity in people's minds, that it's like, what's the utility of this? So just to make it very practical, what could be 2 to 3 use cases that, let's say, if I work in a neobank, in a fintech, what are the use cases that are like actually real use cases that we can use with stable?
Yeah. So for stablecoins, the biggest and probably the one that you hear about the most is obviously global payments, remittances, and things like that. And why is that so successful? Well, it goes back to that point we were speaking about earlier of how Stripe can open 101 accounts across 101 countries very easily, so that you're creating borderless finance, right? I think that's what the individuals of Stripe call it. Not only is payment domestically instantaneous, it is instantaneous globally. So there are no borders anymore within that space. And so obviously, if you're considering either domestic or branching out for both retail and business, that's what stablecoins can do. So it is moving money at an incredibly high speed, but also at a lower cost. And so those are the kind of two advantages. The lower cost really impacts more at the international level. When you can look at the other more traditional remittance companies, the Wise and those kinds of players, and they still offer super low transfer fees in certain cases. I think the areas where a real use case comes in is where it's to corridors that are more difficult to reach. So if you look at the US to Africa, that is a difficult payment corridor for a multitude of reasons. And what stablecoins can do is they can keep that at the same price as a very highly used and active corridor itself. So global payments and remittances will absolutely for certain. And building a little bit of Bitcoin into the conversation as well with this. The other use case is it's not just sending, it's also about holding. And that fits with both Bitcoin and stablecoins. So if I am holding Bitcoin, essentially in high inflation economies, why is that good for me? Well, access to dollar. In a number of Latin American countries, it's not possible to hold dollar, or it's not wanted to hold dollar. But if you have access to a stablecoin, you are finished. If you have access to Bitcoin, you are as well. You're exposed to another potentially volatile currency, but you are hedged against that inflation. So you can then do things as a business or as a user, which obviously, if you're providing store value, then as a neobank, I can go, okay, well, what am I doing from treasury management? What am I doing to be able to predict my cash flows into the future? What am I able to be doing in terms of my working capital? I can manage all of those different things. And so kind of two use cases there. And then if you go a little bit further into what stablecoins and Bitcoin is obviously used for, it's the gateway to DeFi, decentralized finance. It's the gateway to Web3. If you are thinking about, okay, I want my users to be able to access yield on their currency. So let's say you're a US dollar account, or they're moving into USD, USDC or USDT, then within the decentralized finance world, you can get access to yield that is offering 4, 5, 6% return. And so again, you're thinking about what can I be adding on top of those? So 3 real use cases, obviously around remittance, kind of holding, and then actually DeFi space. And there are counts, and it's all really about is you as a business, where do you see the gap in your country? Is it that there are a lot of gig workers in the country? Is it Indonesia, Malaysia, where there are those kinds of things? What works within that? Okay, well, we can give them access to inflation, currency, or we can give them access to, they're all sending money, so receiving And that's where it can be built into.
I like that because then we're bringing it back to the coming back to the remittances, the cross-border one, because it's like spot on. Malaysia, Indonesia, they are countries that there's a lot of international movement as such. So how most neobanks or fintechs, even banks, work today, it's like, hey, you have fintech A, and then there's a remittances aggregator, and then we just connect with them.
Yeah.
So how do we bring it to life if we were to say, hey, now we want to do remittances via stablecoins? I have my understanding, but I don't want to cloud the conversation.
Yeah, absolutely. So there's two ways. Where do stablecoins come from? Stablecoins come from stablecoin issuers. And who are those issuers? Circle is one and Tether is the other, as the two largest. You've obviously then got other issuers, CBDCs, which is the government-based, and then you've got yield-bearing ones, which are coming in prominence. But what is the actual flow to do it? Well, you need to first get the stablecoin. And you can do that by either being a primary, let's say, mint or redeemer of the coin, as in I go to Circle, I set up an account with them, and I want to be able to give them $1 and they give me a digital dollar. And so I have that. But in many cases, you can just do it by setting up an API or via a desk that goes onto centralized exchanges. These stablecoins are highly traded on centralized exchanges. So as your users are requesting stablecoins or requesting stablecoins, you obviously go into the secondary market. So once you have the stablecoin, it's obviously relatively simple. What you do with it, you set in your infrastructure to a wallet, and that person will hold. That is a very simple ecosystem, because whilst it is in that ecosystem, it is on chain, blockchain, it is within stablecoins or Bitcoin. If I send to you and you can receive it, great. It can just pass P2P, super simple, like a traditional internal system. The complexity comes when you are looking to on and off ramp to stablecoins. That if we were to have had this conversation a year or so ago, it would be in a very good position, because there were not many, I would say, global people being able to, providers being able to bring certain currency on, fiat currency on, and then also take currency off. And now, if you look, obviously, like again, the Stripe bridge acquisition, that is in infrastructure with on and off ramps. MoonPay recently acquired a company called Iron. You're seeing more of these coming to fruition. So you can plug and play quite easily into these kinds of providers, where they can bring your local fiat currency on and they can take it off. However, there is also then your KYC fee requirements due to the local market. And that is something that also can be a little bit more difficult, because you're starting to interact with the world of decentralized. So it is decentralized by nature. What KYC, KYB can you do in a permissionless world? But there are some great kind of providers out there that fit in within that space, not just on the KYB side, but the regulation and infrastructure providers. So it is a really easy setting whilst you are in the world of stablecoins and whilst you're in the on-chain space. More difficult side, I think that this is going to be the inflection points of where you see stablecoins just moving from 250 billion market cap to 500 billion, is where all stays on chain. Because if I send money to yourself, who's in Malaysia, you might say, well, actually, I want to take that out into local currency. But hopefully there'll come a time when you don't need to take that, because that is accepted at merchants. That is accepted, by any provider you might be doing, or any business that you might be paying. And so we're kind of at the halfway house in the middle, where we're between full adoption, but beyond that point of saying, well, actually, we're just trying to bring in crypto native users into the space. So it's it is it's a great place to be at the moment, because where you can also start to see as a neo or as a business of any point, there are options. I know people who are guiding you to all of these things and these things.
Yes, and it's I love the it's not even the concept, but the world where, like you say, right now, stable coins are still for a few people, right? And therefore, that's why you need to convert them into your local currency. Let's say you send me stable coin right now. If I'm based in Malaysia and I want to use that money, I cannot in my day-to-day life. But it will be cool when I'm scanning around QR payments and now I just
Absolutely.
select to pay with Malaysia Ringgit or with something else.
Yeah. Yeah. And I don't think that's far away. Visa is very active in the space. Made I think, a strategic investment into BVMK, who again, are a serious infrastructure provider within the space, issuing cards, stablecoin cards, issuing stablecoin cards. And so who are kind of a neobank within the space, issuing cards. So it isn't too far. I think where the traditional routes are being built and are being built well of what needs to be done, there's still some resistance, or I would say friction actually, at the user level of, let's say, merchant payments. When I get down to an actual merchant payment level and say, I'm going to accept my card, there are then still high fees on the tapping of the card with stablecoins. It's kind of like, you imagine, stablecoin issuers are at the center. They've got that sorted. The on and off ramps coming down and the pentacles, they've got that sorted, and then it's branching out again into other spaces of what do I do when I get to that level and get to that use. But that will come, and it's great that the kind of the infrastructure is being built that way out with huge players like Visa in the space.
I want to expand on that because you've read my mind when you mentioned cost. I was like, wait, this is a podcast, right? But if we were at work and this was like a work conversation, at this point, I could have been like, hi, Richard, all these sounds really good, but let's get into it. It's what's the cost? Before we go deeper in it, that's what would have come into my mind if this was work rather than podcast.
Yeah.
So let's answer that question.
Yeah, absolutely. Yeah. I think the neobanks that we speak with, and I've spoken with in the past, the cost, if you look at those startups, I would say a vast percentage of their business is compliance teams. And they are spending amounts of capital building out compliance teams, whether they are custodial or self-custodial. These are two different models within the stablecoin space and within the DeFi space. But a custodial model is basically the neobank obviously custodies the assets. The self-custodial is that the owner, myself, that actually owns and controls that, private keys and things like that. And I'll come into cost in a little bit as well. But while you're building out those compliance teams, you have to consider what those things require. Custodial, regulated, right? Pretty checked, you're handling and holding the money. On the self-custodial side, well, the cost actually probably comes more from you've got to build a UX that is highly, if I'm self-custodial, so if I'm using a self-custodial model to keep my private keys, I have to do things like choose which blockchain transacting the stable coins on. I have to do things like check the gas fees and all of that. And so building out that UX is actually quite difficult, especially for if you're trying to access providers to non-crypto or stablecoin native users. And so you have to make that trade-off of, are we going on a custodial route or are we going on a self-custodial route? Because then obviously that will then feed into your technology costs, what you're building out, and also your security costs. I think people read and I've read a lot of the dangers of crypto, of wallets and exchanges being hacked and money disappearing and things like that. Well, that's absolutely true. So you have to make sure that whatever ecosystem or infrastructure you're building has high security. because there are bad actors out there, as there are in the world of track market, right? There are cheap finance. So I think compliance is a big one. The user experience is obviously, standing on security. And then the final one is probably coming into your liquidity management, your treasury management, because whilst there is a lot of liquidity on coin, on stable coins, you're using a centralized exchange, you're still having to ensure that your on and off ramps are liquidated enough so that people can move their money in and out, right? And what are the fees on that? And again, speaking to some of these on and off ramp providers, the conversations that I've had with them in the past are, well, we're all starting out. They're really looking for companies or businesses at the moment to do it high volume, because we need to recoup our fees, probably the expenses that we've paid as relatively new startups as well. So if you're having to use on and off ramps to manage this, are you going to eat those costs? Because the whole point of stablecoins is that, the whole point is that it's relatively cheap. But if you're now adding on an off ramp cost to your user, you might have to actually consume those costs yourself.
Yes. And then you touched, well, other than cost, that is like the work question that comes to mind. The second work question that comes to mind is you talked about security. And yeah, there's a risk and it is real. So how about fraud? It's a very large topic. So I'll just say that. How about fraud?
It's a big topic, right? And I think that this is another, so this comes into a great regulation conversation. But the good thing about traditional money movement or traditional banking is that if you're a fraud, you are protected as a consumer. That is one of the best things. If you get frauded out of your money, you can call your bank, you can tell them it's been proven, and you get that money back. The fraud sits with the bank. So for you as a user, that's fantastic. Now for you, obviously as a business, that's not so great because you're having to pay out all of these fraudulent claims. And so I think on this, there's two parts, but I think the first part on that fraud aspect is that it goes back to that custodial versus self-custodial. You have to ensure that you have the right practices in place, because there isn't consumer protection that is going to return your capital. So that is what is not being worked on, but that is what's being looked at, right? If you look at the United States, they've just got the Genius Act this week, which is a big stablecoin piece of legislation, which is mainly around stablecoin issuers and what is a stablecoin viewed as a payment instrument, right, rather than security or something like that. But that is probably months/years to come. So that builds into, I think, your user experience journey. How do you ensure that you are not building a product that opens the door to more fraudulent activity? And then kind of going beyond that, what are you actually then doing? And you see this a lot on these sites. You have to educate in a lot of cases. You have to educate, you have to teach people, you have to show them if you're following a self-custodial model where I own my money myself, how are you protecting it as an individual, and what are you guys do to be able to help me understand that? So everyone is learning. In saying the good thing, stablecoins, is that it's on blockchain. That's traceable. So again, if you see these, so there was obviously an exchange recently that got hacked for quite a large amount. With it being on chain, you can trace those funds and you can see where those funds are going. Now, whilst that obviously isn't potentially going to benefit me as a user, because I can just see my money disappearing or going through different spaces, what it does mean is that the industry can build really solid fraud models around it, and can really easily train their fraud and bad actor detection on what these things look like. If you look at the open banking within Europe and within the UK and pretty much around the world, right? One of the great things that came out of open banking was that they could easily detect fraudulent activity. They could detect things. They could train AI models not only on that, but let's say on credit scores, things. This is all possible within the world of blockchain because you have every piece of information stored on a ledger. So it's super easy to be able to see. It's just about making sure that it's there. So, would I say that fraud is as prevalent, more prevalent within the world of digital assets and stable coins versus traditional finance? I don't know the stats, so I'm not going to say yes or no. But what I would say is that I think that it's probably getting a lot more exposure because of it being a new world, it being a bit of an unknown world versus the old side of, yes, we know that people get defrauded on the traditional finance side as well.
That's a big consideration, right? Especially as fintechs or neobanks start saying, yeah, we want to get into the stablecoin train. We need to think it properly. And it needs to go into the product design process. Not just, we build the infra, we build the user experience, and eventually we pass it to the fraud team to do some fraud rules.
Yeah.
It needs to be by design since the beginning.
It absolutely has to be. And I think that, again, if you look at the people who are doing it right and doing it really well, they're not just building KYC, KYB checks, the minimum level in an unregulated world. They're building it to the expectation what is coming in the future, highly regulated world. Companies like Sling Money, who provide services like Neobank or P2P, they get a fantastic check. They will be able to then make sure that, again, in the future, if something comes along and they're like, okay, well, we're going to look historically while we've been doing this. Well, yeah, we've taken a view that you were going to come and do this. And it was the same thing at said. Within what we did at Circle, it was we build not to the regulation that's there. We build to the regulation that we're expecting at the highest level in the future. And then I think that as a user base, you don't obviously want it to become prohibitive, and you can still get and set up an account in 3 minutes as you do with Wise or Revolut or someone like that, but you still get all the information that you need to be able to help on that side of things.
Here's my other question that was running through my mind. That is, like, you also mentioned this money is not protected. Like at some point we were like, hey, money not protected by FCA, of the UK. So then when you said that, I was like, of course. But then from a customer perspective, like, we bank with a bank because we know the money is protected. And that gives us trust. So in this case, we know the money is not protected, and then it's kind of risky. Well, we start building this cloud in people's minds. Hence, what you mentioned was education is super important. And then as we educate and we build for the regulation of the highest standards of the future, then we also need to communicate that to customers that by design, this is built with security at the center and regulation in mind and all.
Completely. And I think that it's about choosing that. The great thing again now is that we are in a world where the partners that you can choose from are incredibly high. So it's about you choosing the process along that journey. If you are to look at Circle, for example, when I was at Circle, there was a depegging event. A depegging event is basically on the secondary market where you can get USDC. So from a centralized exchange, you don't get $1 for $1. The $1 that is on the secondary market and exchange, you can actually get for 90 cents. And showing a view that it is not worth doing anymore. So there was obviously, amount of withdrawals from Circle in terms of people panicking, in terms of what was going on. But the amazing thing, again, choosing the right partners, issuers like Circle, well, if you gave me $1, what did Circle do with that? Well, it basically kept it in cash or in something called HQLAs, right? High quality liquid assets, T-bills, things like that. So that if you wanted your money back, it could easily give your money back. And that's, again, if you look at traditional bank runs, where as a consumer, actually, I'm going to go to the ATM. Think in the UK example of Northern Rock many years ago. If I go to the ATM and try and draw my cash, the ATM says there's no shit because there isn't cash there. The money that you gave to the bank has been lent out all over the place. However, with these stablecoin issuers and choosing that right partner, you can see that actually the time it takes to return your dollar from where it was stored is within a day. So that's something, again, that within that mindset of speaking to customers, it's like, well, okay, if I give you $1, where does that dollar go? Well, it's actually custodied with some of the most trustworthy banks in the world. In fact, probably the most trustworthy banks in the world. And so, again, it's about piecing that story together because, again, especially stable coins, well, where is that? It's here. In Bitcoin, that's still the same aspect as well. So where is your partner custodying that Bitcoin? Because there are many custody providers of Bitcoin out there. So if you're wanting to consider, if you're not going to do that, you're going to as a neobank, well, I want to choose one of the highest quality digital custodians out there so that, again, I can return that money on when it's required as well.
Yeah. Can you expand? I think this is a critical point. How do we select the right partner? Or maybe the right question is like, what's the criteria that says this is a good partner?
It's good. That's a really good question. I think that what you are the starting point of when, again, people within the Rootstock ecosystem and having these conversations, the starting point that I speak with them is they have to align on your values of what you want to build going forward, right? And so if your values are, you are wanting to be highly regulated or at least attempt to be highly regulated in what could come in the future, that you are building for longevity. And again, stablecoins is becoming sort of digital native and full product offering. And so combining those two things, I think you've also really got to consider at this stage, where are and there's probably two sides, where are the majority of people going to? Because we are in not a fledgling industry at any stretch of the imagination, but we're at that stage where I think there are players coming to fruition who are more considerably large than others. BVK, as an example, Bridge and Strong, right? But you look at those and you go, okay, well, those are the kinds of partners that I think I kind of like to because they are the larger, and they're all highly innovative. So there's no thing sort of in this industry who are the top. That's the amazing thing because there's such a big for everyone to go after. Everyone's incredibly paranoid to be able to make sure that they're providing the best service. But then I think on the other side, you look and there are some incredible, well, not new ancients in the space, but incredible providers who are founders, businesses that are who've spotted the gap, be an on and off ramp, or whether that be a clients provider or a tech provider, and they've built something really small can be doing because I think. So if you are at an earlier stage of your journey, being a neobank, then you're obviously going to scale up with that. We, Rootstock, are kind of within actually a different doing. We were looking at different partners that we could be using, and one of the things that really appealed to us is that one of these partners obviously kind of covered all of the regulatory concerns that we had, compliance concerns, and this. But they were on a similar stage of really wanting to grow of a certain area. And so they were so big that we became a little fish to them because I don't think they kind of often do that. But they really, really wanted to help us and grow with us. And that coming myself coming from a kind of traditional finance / fintech background into stablecoin, digital assets, and then into crypto, the thing that I've noticed more than anything is there is a huge community of everyone trying to help everyone. So you can plug into that and you can say that we're all at this, very much like a startup thing, kind of founder group, right? But across the entire industry, right? So if you're wanting to look for a corridor between Malaysia and Kenya for on-off ramps, you can go to one of these people and say, look, we're wanting to do this. And they'll be like, that sounds interesting. Is there a market demand for it? Okay, we'll do it. We'll look at building it and those things. So no, I think the first thing is that, like I say, they have to meet your cultural and your perspective on what you want to do with stablecoins. And yeah, I think the final point on that is stablecoin native businesses who do just stablecoin work will, if you want to go deep into stablecoins, that's like, because that's where they're dedicating all of their time. They are obsessive with the technology and they want to drill down into it.
Yes, that makes a ton of sense. I think we've been speaking for almost 40 minutes. Tell us about Rootstock. Like, what exactly did you guys do?
Yeah, absolutely. So Rootstock, we are a Bitcoin sidechain and we are EVM compliant. So what that means is if you are a user or a builder on Bitcoin or Bitcoin, you can then use Bitcoin in EVM, which is smart contracts. So which are basically if-then statements, right? This is another thing that's saying about Bitcoin and great about stablecoins is that if this happens, then this should. And so when you are a blockchain that allows for that to be built, but uses Bitcoin as the underlying asset, then you open up a huge world of things that people can do. So take, for example, I am a business builder. I'm a neobank. And I want to appeal to Bitcoin holders, right? There are many Bitcoin holders all around the world, but let's say I'm in Latin America. Those holders are individuals who are wanting to hold their Bitcoin, but then they're also wanting to look at the business and they're wanting to make payments, SME payments. Well, what can be done on our blockchain is our smart contract technology is to be able to build that technology so that people can use that Bitcoin, keep their exposure to Bitcoin, but then also have things happen with that Bitcoin that relates to an if-then kind of state.
Like tie this all together in a practical, innovative way. And I'm going to speak just like thinking out loud. This may not even make sense. So we're a neobank. We don't have exposure to, let's say, Bitcoin, stablecoins, just like a traditional neobank. And you say, hey, we need to go into the space. One option is, hey, we will create a wallet for people to hold, whether that it's Bitcoin, stablecoins, so then they can have it. Then my roadmap would be like, hey, you need to be able to receive money. You need to be able to hold money. Ideally, you'll be able to get some interest from that money that you're saving with us. Then my next use case is going to be, you need to be able to pay with this money that you have. So maybe in the short term, there will be like a card that you pay with card that you pay with Bitcoin. In the future, there will be a QR payment in Asia. It's like QR payment enabled with stable coins or Bitcoin in the background. So that's like basically holding money, saving money, paying money. But then for me to pay, of course, there needs to be the merchant that's accepting these payments. Most neobanks don't do acquiring, but there will be somebody else doing the acquiring bit. But what you're saying is that's, let's say, the quote unquote basics. But then we can innovate even further if we think of companies like Rootstock, that then we put together the use case of programmable money.
Absolutely. Yeah, absolutely. And Rootstock being that blockchain, Rootstock is it's a payment network in essence, right? Within this conversation, it is a way to send set from A to B, like Epsilon, Ethereum. And what blockchains do and what we do at Rootstock is we think, well, how do we make that payment network or that network as usable as possible? What can we do to make it as interesting? And like I said, what we obviously did is like these Ethereum style smart contracts so that people can program that money to actually be able to act and work without any interference or without manual input. And also the other aspect to it is that you see, if you look in the world of crypto, Ethereum is a huge blockchain. And the people who use Ethereum are often those who are wanting to build programs, build, let's say, neobanks, or build anything, but on chain. Well, what we do is we take that ability to build on Ethereum, which is kind of seen as the biggest developer blockchain. And we say, that's great. But what about if you want to build that, but you use Bitcoin as the underlying asset? So you're then able to use whatever you're building over there, but you use Bitcoin, and we help you obviously transfer that and forth in whichever way that you're doing it. And we do it as quickly as possible, which is relatively quick in terms of, especially very quick in terms of traditional home, and also cheaply. But when we go, and what Rootstock and what we build specifically for is the security. Bitcoin, and this is going reasonably a little bit deep, is some proof of work. So how do I know that a Bitcoin transaction is being made on chain? Well, it's by these things called miners. And you've probably seen it in the news of these people mining Bitcoin. Well, that secures the chain as incredibly secure. Well, what we do is we take those miners, we're secured by about 80% of those miners. So each transaction on Rootstock is secured by the same 80 to 90% of the same transactions that occur on the main Bitcoin chain. So again, when we're having these conversations with neobanks or whoever, you always get to that aspect of, well, what's the security like? Can there be a breach in the chain? Can there be a breakdown somewhere? And our response to that is, well, Bitcoin is the safest chain out there, and we're the second safest because we understand nearly all of the Bitcoin chain.
And then kind of like going full circle. At some point you said when it is important that when you choose a partners, it needs to be aligned with your values. You guys are very purpose driven as well. That's what caught my attention. Was like, oh, cool. Of course, we're in purpose driven fintech, right? So we cannot not talk about purpose. So tell us a little bit more of what makes you guys purpose driven.
I mean, it's in the DNA. Our founders are from Latin America, Argentina specifically, and one of the reasons that they founded Rootstock was because they wanted to provide everyday people and everyday users the ability to hedge against the inflation of peso or currency that they're exposed to. So they believe, and we believe, that Bitcoin is that way to be able to do it. And so they built Rootstock as the blockchain to be able to allow for those different things. So, for myself at Rootstock, what do? I work with our integrated partners who send in terms of trying to figure out what their use case is and trying to figure out how that best fits on the Rootstock chain. So our view is whatever we're building or whatever is being built on our chain, our end goal is always to improve financial inclusion and the lives of everyday users. That goes back into that stablecoin conversation. It's kind of one of the reasons why I joined Circle, because their biggest message, right, is improve financial inclusion. Help the unbanked, disenfranchise the in space. And so we will always go and look at thinking ways that we can ensure, and this is a long journey that we want to be able to go on, but eventually we have built an ecosystem where partners, neobanks, or whoever are built on top of Rootstock, where their end goal is to serve the everyday users. And that was a big part of Rootstock for a number of years. We've gone a little bit more global in what we do and who we target, but the underlying theme is always that getting to the side. If I hold Bitcoin or on Rootstock, you can also hold stablecoins, to bridge them into Rootstock. I'm using it because in some way it helps increase or improve my financial stability, my financial inclusion. I'm a holder of Bitcoin. I am hedged on inflation. But what I can also do is I can use that Bitcoin as collateral to get a loan for business, or I can get from a partner that's built on Rootstock. Because what that partner is going to be doing is they take that Bitcoin as collateral and they might give you a stable coin in return to be able to do that. And so again, it's about looking at all of these different cases and thinking of what is the best option. And we bring the entire ecosystem together. So if I'm speaking to people who's building a lending and business or till wage business where they are providing credit on upfront wages, I'll say, well, hold on a minute, I'm having a great conversation with this partner here who's looking to do something in terms of actually being able to ensure that the collateral you're providing is secure. So if you marry the two together, then it's great. So it's at the heart of everything that we do. And that's a great mission to be able to try and work towards.
It's been a really good episode. Because these are questions that come up all the time for people who are not, like working daily in the industry, but the ones that we are thinking, hey, we want to get into it. It's like it clarified many points in a easy to understand way. I would say it like the plain English way.
Right. Yeah, good. Yeah, exactly. And that's really useful for me because, to be honest, I'm someone who doesn't do well with technical jargon either. So it always has to be to easily understandable.
Yeah, it's the plain English one. Okay, so just like to finalize, like given that we've covered so much, what do you think are the 3 key takeaways that we have from this conversation for someone in a neobank?
Yeah, I think you have to, a big one is you have to really strongly consider, are you going to build stablecoins into your business as a feature, or are you going to build it in as a full infrastructure? Are you wanting to add it as an add-on, or is it going to be actually something that improves efficiency all around? There's no right or wrong answer, but obviously it's about then you're going to set up to try and achieve that goal. My answer to that is that stablecoin help throughout the stack and towards the end user. So you don't have to become stablecoin native or Bitcoin native, but it's very worthwhile considering. I think that it's about solving the real pain points, especially for the underserved in your region, right? Or within your area. Is it that stablecoins can provide better remittances? Is it that stablecoins and Bitcoin can provide collateral services for loans? Again, what is the pain point that it is that you're solving? And I think that it's about the build. So build securely, build forward-looking in terms of compliance, and build UX that is, again, suitable for your user base. If you are going after stablecoin and crypto native users, fine. They get, seed phrases, keys and gas fees and things like that. If not, I'm probably not a user who's going to want to know what chain I'm transferring money on, nor do I want to have to put in a 30-digit wallet code to know that I'm sending my money from here to here. It should be from Richard to Monica, and that's it. So I think it's around, I would say around those points are probably the biggest for me.
Perfect. Richard, it's been a pleasure having you in the show. Thank you so much.
Yeah, thank you so much, Monica. It's been great.
Thank you. One second.
Thank you.